start with the precious metals first, and the strength in case of the dollar, the strong US data, and of course the run-up in equities, all of that seems to be weighing onto this sector. So you have seen the gold prices come off their one-month highs, trading below $1,250 per ounce in the international markets. In the Indian markets, the rupee, while it had opened on a weaker note, has turned around, is looking at positive moves at this point. So you have seen that also impacting the calculations. So quite a bit of a decline now at this point in precious metals in both gold and silver. The profit taking has continued for the energy space as well. We saw the Asian market start on a slightly positive note as the markets are expecting a decline in the weekly inventories there. But having said that, we still are holding just about that 92.5 per barrel for the NYMEX crude oil prices. In the Indian markets as well, there is some more deeper correction coming in. The base metal prices, they had some knee-jerk reaction on Monday and Tuesday after Indonesia did ban the bauxite exports. But having said that, markets still are watching out for the Fed tapering news. A couple of officials from Fed have pointed out that they would like to see a continuous measure of tapering in Fed going forward in 2014 as well, and that seems to have dampened the sentiment slightly there. But how do you trade all of that space? For that, let's get in a strategy from Milan Bavishi.
Yesterday, MCX Gold gave a breakout on the upside, however it retreated during the day. So a fresh buying is advised only on declines so that the risk-reward ratio is favorable. Buy MCX Gold around 28,800 levels for the target of 29,300, and stop loss can be placed at 28,650 levels. Buy silver on an intraday basis around 44,460 levels for the target of 45,100, and stop loss can be placed at 44,300 levels. Positional trades can be initiated either on the extremes of the range or on breakouts. Copper has a long-term trend line support at 446 levels, and around 443 levels it gets a support from 200-day moving average. So this zone of 443 and 446 is a good buying opportunity. Traders are advised to wait for copper prices to correct to this zone. Buy MCX copper on correction at 446 levels for the target of 460, and stop loss can be placed at 441 levels. MCX crude oil has given a bullish engulfing pattern yesterday. Now this is a bullish reversal signal. Along with that, the RSI is trading in the oversold zone. So both these data points indicate that the chances of bounce back are high from here. The data on US inventories will be watched out for today. Buy crude oil positionally above 5715 levels for the target of 5980, and stop loss can be placed at 5630 levels.